Alrighty, Doc here from North America. Good morning and good afternoon and good evening. And we get the news coming out for CPI, which should be very interesting. It's already out. So let's see what's going on there price-wise. Let's see, right there. Like yesterday. As soon as the news came out, they drop it in the first, what's that? That's the first second. There's this 8 seconds later, just like yesterday. Drop it. Now what will they do? They'll probably try to slowly inch it up again. It wasn't that big a drop. It was only like a 10 handle drop, maybe a 9 handle drop, something like that. And they'll bounce around a little bit, just adjusting their positions. Nothing major. No reason to get too excited about it all. And let's see. You can see all the numbers there on Dukascopy, and what we'll do is we'll just where's it at? Let's go through it again. Just find it right there. There we go. And as you can see, there's the month over month. 04 actual versus 3 estimated. We were expecting strength like that. Nothing major. It's major in the sense of it's happening, but nothing that would be too surprising. 3.7 versus the 3.6 right there at the bottom. And so the 4.1%. Core annual, so that's kind of like we've been saying, that inflation is inching its way back up again, just because of all the wild spending by the administration here. It'll be it won't be too, as the initial jobless claims interesting, 209,000 versus 242,000, and you can see the stock market has moved down, right there. You can see that it's moved down from the 30-ish area to the 18, down to 16 or so, something like that. And I'm sure it'll find a way to perk itself back up again. That's usually... All right. Yep. Pretty much that's what it comes down to. Yep. Indeed. All right. They ask why it's happening. Energy costs are higher, labor costs are higher, it just does, it's hard for it to back off with all those things always moving up, and it is what it is, we're going to change policies soon. Within the next year, we'll be changing policies, and it'll straighten things out more. All right, so you can see, we have the euro up. We didn't have the dollar index. I'm sorry, what happened with that dollar index? Let's see what that looks like this morning here. There is the dollar index right there. Nope, that's Deutsch. Just missed it. There it is. And you can see the dollar is still just drifting down. We have bonds kind of still moving up. Let's take a look at the bonds really quick in here just to get a flavor of it. There's the dollar index over here. And you can see that right there, trying to perk up a little bit. And then you can see it right here. Same thing, just trying to lift a little bit, just a little push. The weekly is still in the buy, but it hasn't sunk that much from the 107-ish down to the 105 and a half-ish area. It's going to back and fill. I'm not seeing the chat line. I just realized that. Sorry about that, traders. Let me go to the chat line. Oop, sorry about that. Now I'm on the chat line. Oh, nobody said anything. Just Robin. Hey, Robin. It's a Thursday, so it's kind of quiet, Let's take a look at the. Where's it at? What was I thinking? I was looking over dollar index. Oh, I wanted to look at the bonds. Let's see what the bonds are doing right there. Bonds are dipping down a little bit. It's been in a buy for about 4 days. It's been acting really interesting with that bottom in here, and it's just been pushing back up. And I don't really expect to see much difference. I don't really expect to see a lot of difference from that too. I think they're gonna they're going to be trying to bottom in here. People have been saying that this is the threshold now. This is like the doorway. They see the Federal Reserve kind of run out of energy to raise rates, so they're thinking, well, with the war going on we've got a couple wars and so forth and so on. They figure, well, let's leave all those interest rates alone for a little bit. So there's a lot of feeling out there that we're not going to see. Let's just say U.S. consumer inflation, monthly publication of the U.S. dollar index reacted. Yeah, definitely, it's bouncing around a little bit there, and the core is 4.1. So that the month over month, year over year, I guess, is 3.7 now, moved up a little bit more. And the core overall is 4.1. And that's the one they really pay attention to, the core rate, the 4.1. And, it'll probably get to like 4.2 by the end of the year, or 4.4 or 4.3, something like that. And, and that'll be half of the high, basically, the nines, basically. So that's not too bad. They've cut down the growth of inflation by a half, which is not bad. They didn't cut inflation. They've just cut the rate of the inflation into, they've knocked it down. That's all. It's still growing at a, way more than it should be. It's growing at 4+%. And we were used to 1.5% for a bunch of years, and growth at the same time, 5 and 6 and 4% GDP. And now we're at like slower GDP and higher inflation, and they call that stagflation. That's what that is. In other words, it's stagnant economy with inflation, like the Jimmy Carter years, stagflation. So. All right. So from there, we go over to the see what the euro is looking like this morning, and we're going to talk a little about options. We're going to talk about what the options are trying to tell us, because usually we're right about what they're trying to tell us. So, and that's the euro right there, and here is the euro right here. Let's get the euro up on this. And there's the euro right there. You can see, dipping down a little bit. Bonds are not really reflecting that much of it. You can see the weekly still has not gotten through the weekly buy. You can see it over here, over on our new platform. Where's it at? Right there. See the same thing. This is the let's see if we can widen this out a little bit more like this. You'll be able to see it. But I guess I got to do it right there. And as you can see, it's trying to dip down a little bit. In this case here, this is the futures contract, so it was much higher. As you can see here, it made a high. Let's switch over again, like here. You see it made a high right there. Let's widen that out a little bit. And it's actually trying to take out the lows now in the cash. This is the cash. This is the futures. We're still working on getting the data feed from DocDow. And then over here on J4X, on the DocDow platform, we go to the euro there. And there's the euro there. If we turn off the hinky right there, you see it's trying to do that dip. Doing the same thing. It's doing that dip down. Just as we're doing right here. That dip down, that's the spot. These are both spots, and this one is the futures contract off the CME. So it's dipping down, but nowhere near as it's not taking out the close of yesterday the way the spot is doing over here, and the same over here. Going down to the lows. So that pressure is being put on the currency, and we're not really seeing, the options are not really describing any real change, no real dramatic. And that's a good thing, obviously, because we want stability. We want steady, consistent movement with, not wild explode. Well, it's nice to catch a wild move. That's always fun. But when it comes to trading overall, you kind of you want the consistency more than you want the explosions. And so right now you can see it can't get into the weekly buy. You see that right here. So there's no real attempt to try to get long here more than just on a very short term basis of day to day. Whereas the weekly's telling you, it's trying to lift, but it hasn't gotten through this zero line here. And as long as it doesn't do that, then we know that this thing is basically fighting. In many ways, it seems like there's a lot of background noise of issues and politics and, oh, there's Janos. Yo, Janos, let's see. He says, market did not care for the U.S. PPI being higher. Now the CPI doesn't seem that different. Yeah, I know. Isn't that odd? Looks to me that we might get the same reversal of the dollar soon. That's what I'm thinking, too. Let's see, where are we at? Let's just put the short-term intraday up. And you can see here they've taken it down 20 handles from the 4,430 area on the S&P 500 from here. From that news, they did the same thing, and then yesterday the PPI looked like this. They brought it back up to it, touched this, then rolled over, and then slowly throughout the day found a way. We can even go back and look at it. Let's see. That is. So there it was right there yesterday. And then it ran up and it kind of came down but didn't take out the lows. Today they've taken the lows out. So they keep on taking the lows out, and it was a slow, steady grind on the way up throughout the day. And now they've, here it is today. It would bring you right to where we are right now. After a great move last night, and yesterday afternoon, they take it down, they tried to lift it up, and now it's taken out the lows, whereas yesterday they did not. So I'm assuming that if we start to take out this maybe the 422 to 423 area, maybe what we'll do is we'll start to come back up in this area. So they may work on that later in the afternoon. So I agree with you. It should probably do the same thing later in the afternoon. Pre-market stock prices are going all over the place. Currency seemed to be looking for support in previous high zones. Yeah, we saw the bonds. We took a quick look at the bonds before you jumped in. And you can see the bonds themselves right there are starting to back off a little bit. This is the 30-year, the long bond. And so that'll make them a little nervous. I mean, we talked about this yesterday, how the Fed governors and some of the Fed presidents of the national banks around the country, the Fed banks that are around, came out and said stuff like, oh, maybe the market is doing it all now. In other words, maybe the bond traders are setting the real price to interest rates. And I'd say, yes, that seems to be the fact. But at the same time, they're saying that because they don't want to raise rates because they see the rates being raised by the market itself. So, I mean, there's a real strong feeling that we're going to see 6%. There is some people I trust, let's put it this way. People I trust believe we're going to see like 5.5%, 6%. And so that's slowing the Fed down from trying to raise rates anymore because they don't want to enhance that move up. That's what's got them concerned. So gold for clear just retraced yesterday's high range. Let's see what gold looks like. There's gold. Yeah. So they've made new highs today, and now they've dipped around it a little bit. And you can see. Matter of fact, why don't we do this? Let's put gold into the this one right here. We have the euro on a half hourly because someone had asked us for it. Ooh, look at that move, the half hourly on the euro. That is one big dip down. That's a spot. Now, let's take a look at gold. GC. And there it is. There's gold. Yeah, look at that. Gold did the same thing. Took that nice big dip. It's trying to bounce back up. And I imagine if we put a 15-minute in there, it probably looks even better. There we are. So you can see there's the gold trying to do the same thing. It tried to bounce up, and now it's backing off. We went into the buy right there. There was the buy right there, and so we moved up from the was that the 1894 area, basically all the way up to 1898 area. So, and then the news came out and they slammed it down, and then we went into the sell right here, and we're still in that sell. So this may challenge this area here. They may bounce around in here for a while. It's the sell is right there at 91.6, and we're at 90.70. So we're just underneath the sell at the moment. And we'll see what they do with that for a while. What else can we say about that? And obviously the currencies too. Look, the CPI and the PPI, I was impressed by the PPI. But more than that is that they really took the key from the, like I said, the Fed governors and the Fed presidents of the different Fed banks around the country. They made it pretty clear. They thought that this was the doorway to no more increases. Now, I don't see any cuts coming until, say, July or August of next year. But when it comes to increases, the market's trying to push us up into the fives. And let's just take a quick look at the bonds since we're having this conversation. And we could even take a look at bond options and see what they're trying to tell us. Let's see, where am I at? So we want to see, what was I looking for? The bond? No, I was looking for something. I had something in my head I was looking for. If someone can remind me, what was it? Where was I headed? I went to there. Maybe it's the... Oh, I know it is. I want to go look at bonds itself. That's what it is. So let's look at the bank of bonds. Trading. There it is right here. And so you can see here, the 1 month is trading at, here we come. I'm going to throw this up on the screen. So there it is right there. Like the 1 month is at 5.4. The 2 month is at 5.47. The 3 month is at 5.51. The 4 month, let's see, what's the highest? Right there. 6 months out. That's what they're already pricing in this action. 5.5, almost 5.6. Now there's some people that I really trust believe that we are going to see 6% interest rates, and then that's going to be when it's done, as far as they're concerned. And that's how I look at it. That it's a combination of the inflation and the interest rates and the carry of both. So they need these interest rates, short-term interest rates, need to get up to around the 6% area, because that's where they, with the core at 4.1, they're thinking that it's going to drift up to say 5, maybe even a little bit more next year. So they think that the market's going to anticipate it. Now you can see here, this is the bottom end of it. You can see they start to curve the yield. 1 year out they go to 5.4, and then they go to 5, and then 3 years out they're at 4s, and so forth. So they don't really believe it's going to stay up there. But one thing's for sure is that there's a strong feeling that it's going to get to the 6. And you don't really hear a lot of people talking about these rates down here in the 5. That's why down the rates here, 6 months out, 5.57, almost 6, 5.6, not 6, but 5.6. So 4/10 more, and that's why we see the dollar firm compared to the other currencies. Let's see, currency seems, yeah, okay. So that's really where we're at. Now, when we go into look at, let's go see if we can get the options up on here, and we can take a look at some of the the interest rate products, and let's see, let's go to one of them right here. Let's open that up. Right there. Let's open up the option chain. See, Google hit 140. Meta hit 325. I heard Meta yesterday was at 328 at one point. You mean on the downside now or the upside? AMD is still below 112, and Tesla is $10 away from 275. Yeah, I mean they're not really putting that much of a hurt into this stuff. Look, money likes to anticipate, X amount of months down the road, and so what happens is that they do that. That's really what it comes down to, is that the money is trying to interpret, kind of, or like speculate, basically speculate the when the markets are going to be reaching for these equities. Giannis brought it up a while ago. What top 4 stocks X period of time. Luckily, one of them made me look like a rock star. We talked about U.S. Steel, and a day and a half later, the stock went up 50%. Or a day later, it went up 50%. So that was pretty cool. I mean, the stock was trading at 18, 19. Next thing you know, it's trading at 31. That's the type of stuff that tells me money is starting to look. They're trying to find bargains now, willing to take the risk. And I mentioned this over the last month and a half. Money managers since August now. Where are we at now? We're in the middle of October. So the last 6 weeks, money managers have been saying, it's time to take the risk. It's time to step up. It's time to buy and dollar cost average in, because this is usually statistically the weak time of the year. I see. There are target numbers we discussed on Monday. Yeah. The Australian pal used. Most likely the deep state were watching and took your advice. Yeah, well, it's the money managers. When I used to work for the hedge fund industry, that's the way that I know how they think, because I was helping them to, guide them, in trading the options with their positions. So I know how they think because I worked with them for a couple of years, and so they do that. They start to take risk. They basically try to keep they rarely really take, a lot of smart money managers rarely take a lot of risk. They wait a long time to find that risk point. And what I mean by a long time, they can wait 2 or 3 or 4 years, and sit back and just stay invested and keep a nice chunk of money on the side waiting to go in when they finally feel that they're close to a bottom. They don't have to be at the bottom, just close to the bottom. So, when we know that the lowest point statistically is between September and October, they were stepping up a little early, trying to buy in mid-August. Remember, we talked about this, and we even named it in some of our titles. And then what you had is I want to say you accidentally asked a question. It was well worth asking. I answered it, and literally one of the 4 stocks that I suggested went up 50%. But that's not. I want to say that's not hard in some ways to anticipate that. There's a few of them out there, like the way Pioneer went up, by ExxonMobil buying, so forth. I think, matter of fact, I might have even, one of the stocks might have been ExxonMobil, and that stock has gone up since we talked about that in August. Let's see, where is it? Let's see if we have ExxonMobil. Let's put it up on the screen here. Let's see. I think ExxonMobil did. We have steel on there. Let's just take a look at that. But it's normal for them. That's the way they work. They people. It's not magic. Let's put it that way. They have a process, and that process is not mystical. It's taught in all these universities like Wharton or Wisconsin, where or Harvard, or any of the places that teach hedge fund managers, and where they're strong at it. Wisconsin's very strong at it. I know people go, Wisconsin? Yeah, Wisconsin. Yeah, Wisconsin University is really big on a lot of hedge fund guys come out of there. All right, let's see. Give this a spin and see if we can get it. There we are. Should be down at the bottom. There it is. And there's ExxonMobil. Let's see. I think this goes back 45 days. Let's see. Why is it not jumping out? Let's try that. That's there. Did I have the wrong symbol? I thought Exxon. There it is. Exxon. Okay. So, no, yeah. So, Exxon's like a $90 stock. Back in August, it was, when we started doing that in early August, it went from $90 to $100 a share. Then they backed it off, and now we're back to where it started from. Whereas U.S. Steel, is more for infrastructure. So they start thinking, matter of fact, it doesn't even show it, because I guess what we have to do is we have to go in and find. Let me see if I can find it. Let's do it over here instead. Let's see. Let's just do this. Right there. Let's see. All right, there. So let's just put it in right here. We can do this. We can put it in right here. And we'll put it in steel, which will be a much more clear picture of it all. Because it's right, we have at least a starting point. We know where that is, like right there. And we're turning into more of a stock conversation now. But what it comes down to for currency traders is know that as long as the interest rates keep on staying firm to up, we're not going to get selling of dollars. They just won't do that. They just won't sell dollars. There we go. We don't have X up there? I'm surprised. Add a symbol. How about that? We don't even have X in there. Okay, here's that. Let's see, right? Where's that? Right. We'll find it in a second. Right there. There's that. So we add that. I go like that. And then let's do this one. We'll put ExxonMobil in there too. I can't remember what the other two stocks were. But I do remember ExxonMobil. Looks up. Maybe I have it wrong. Look up that way. That's what it is. I think I have the wrong symbol too. XOM. That's what it is. There we are. Alright, so here is Exxon, and we'll get the date from that. That's what it'll come down to. So we were talking about it. It was right here. It was on the 10th of August, and then they jacked it up just a day later or 2 days later. Now let's put ExxonMobil in there. Right in here. So the stock went from basically 105 up to almost 120. It picked up, I don't know, what's that, 15%? Something like that. 12%. It was a 12% move. Nice. But I know that that's what they're doing. And then just recently they've really sold it down, which was kind of curious. Oh, I know what that was. That was the Pioneer situation. They bought Pioneer for $60 billion. So that put pressure to adjust the price of the stock for buying Pioneer. That's what it is. Everybody thinks it's a really great buy too. So, but yeah, that's really where it comes down to is, they're not going to, money now is looking to be invested over the next 6 months. Since August, they've been looking to be in there. They're willing to take the risk, and they're not going to let that go. And that's why the pressure is on the currency pairs, because two things are happening. One is people obviously want to buy into American stocks, and two is interest rates are higher. So with those two things going on, it makes it very hard for anybody to sell more than just to adjust a portfolio. Let me fix this ExxonMobil thing. I think I'll just delete it once I find it. There it is right there. Delete. Yes. There we go. Okay. So that's really where we're at. The beginning of August, we started looking into this idea. And sure enough, that's how it played out. All right. Now, from there, from the euro, let's go over to the British pound. 6BF. 6BF right there. And there's that. And then let's put it up over here. Right there. And you can see it's dipping down a little bit too. It's been gaining against the dollar. We've seen all of them. All the currencies really have been gaining against the dollar for over a week and a half now. A lot of strength kicking out there. This is the 6th day for that. But the weekly is not turning, which says a lot to me. I mean, you would think that with that much strength, if we don't see these currencies go into weekly buys by the end of next week, then interest rates are going to be, it's going to tell us that interest rates are still rising in the States, and they're just not still at the bottom of the range. And that's pretty much it there. All right. Now from there, let's shoot over to. Oh, there it is. Let's see. Yano says, Steel, any broader outlook on the euro, like a week, month, and quarter? Okay, well, we can take a look at that. Quite often ask me regards to keeping the savings in U.S. and euro. I would say that over the next, like I said, if next week we don't find this thing going into a weekly buy, I think I'd be very concerned. I would think that they may start to retrace some of this action. Now, this could be the beginning of a reverse head and shoulders. There's no doubt about that. This could be, and this could be the right shoulder, and this could be the head right there. This could be the beginning of that. But right now, we've not really seen enough action because we want these weeklies in the cable, in the euro, and so forth, to shift gears and start to change. And we're not really seeing that. Here's this, the cable is the same way as the euro. Both of them are really fighting not to get going, which is odd. So there's pressure on the pairs trades. Even with the dollar being sold a little bit right now, it's not being sold enough. It's not proving that they've really felt comfortable to get fully invested in pairs and move a little away from the dollar. Keeping their savings. Yeah, I mean, right now, I would say you want to be 50-50. Half euro, half dollar. I would say that, that's one way of seesawing or straddling the currency risk. And I do believe that when the political change comes to America in the next year, I really do believe that you're going to see a weaker dollar from it. Not a lot, but you're going to see somewhat of a weaker dollar. Because I really believe we're going to see more growth. And when we grow, the world grows. That's the only reason I think we'll see a weaker dollar, is that I think that money will start to move into countries. More than likely it'll be like the Zolty and Israel and where else? Poland and Israel and a few of the other countries. Some of the old Eastern blocs. Like Slovakia, Hungary, so forth and so on. I think will show more growth in them. Even Bulgaria seems to be getting some grip on it. The old line European countries have some real problems economically. They've picked up way too many policies that work against business, and there's no reason for money to invest in business in countries that are not going to be friendly to them. So that's what the problem is. So I would think that the best bets will be the Zolty, in Poland. Probably after all this war stuff is over with, Israel's probably a buy. I haven't looked at the currency itself in a while, but matter of fact, why don't we do that? Because I remember you had me look at it a couple days ago, and I thought, oh yeah, that's got to be a bargain at that point. What was that symbol? I something? U.S. What's it? IL something? Let me go see if I can find it. USD. Oh no, I'm doing the wrong spot. Okay, let's try it this way. USD. Was it IL something? That's a K. There it is right there, I think, right? It's still trading up in the high threes. I imagine they'll bring that down into this area here. That's from over the week. They tried the next day. They tried to bring it down. Didn't seem to work. It didn't seem to work there either. So we'll keep an eye on that. But I would imagine that this thing will find its way back down into the 360s or something like that, or 380s. I would just like the Zolty. Let's see what the Zolty is. Euro. Where's it? Let me find the symbol of it again. Euros PLN. That's it. P. There it is, right there. Yeah, look at that. That popped up for whatever situation in August. But you can see it's starting to back off. I would say that this is what will happen to the Israeli shekel. Probably find its way starting to roll over, move down about 20, 25 points, something like that, 0.25. All right, from there, we'll go over to the Swiss. Where's the Swiss at? Right there. Oh, I do have it in there now. How about that? Okay. I thought it would be put in there once I play with it. Yeah, so there's the Swiss. The Swiss has been gaining against the dollar. I'm a little surprised that it's not doing better, but it seems to be holding up pretty well. Where's that? CAD Swiss. Why am I not seeing it? There it is, right there. It's kind of hovering. At least this is starting to break down on the weekly, but not a lot. None of these are. That's what the problem is. Is that without the breaking down, I can't say, jump in there. I mean, if these things stay in weekly buys we've been in weekly buys in a lot of these products for like 3 months now. In this case here, it went into a buy at the middle of August, all of September, and now halfway through October. It's basically 2 full months. Same thing with the euro. The euro went into the buy, or in this case, went into the sell back in August 11th. Is that August 11th? Yeah, August 11th. And so it's not doing a lot to give me confidence. But next week, if we start to, I would think if it's going to shift gears and change direction, we would see it coming in over the next week. Because we've gone a long while here, and almost 2 full months. And they don't, this buying in here made me believe that they really felt comfortable, on the daily basis. Now, if they go into a daily sell and this thing starts to roll over again, it's right now, I think that the safest play that you can tell people is just be half invested in euro, half invested in dollar, and that type of thing. And then whatever. So in other words, if it's someone in England, it would be long the dollar, and short the pound, and then at the same time be long the euro, and would that be the way to play it? I guess so. Be long the euro. So I think that's pretty much the answer to it all. Again, Giannis, I'm really surprised. It really bothers me that that these things are not finding their way into buys with the strength that we've seen over the last 2 weeks. That says to me that money is not totally convinced to get long the pair and sell the dollar yet. So, betting on the dollar to go down much more than this, I think is a big mistake. All right, from there, let's jump over to the yen. I think it went into the buy again yesterday. Yeah, this is another one of those that it seemed it's been in the buy now for 5 days. 1, 2, 3, 4, 5 days in the buy. It's in the weekly buy since, like everybody else, the beginning of August. That's not a good sign that they're going to sell dollars. That is not a good sign. And then from there, we slide over to the Turkish lira, which I think I saw it in the 30s. And that was a couple days ago, up towards 30. It's just in a buy for like the last 6 days. And same thing with that weekly. And this is a spot right here. I know we've emphasized this. Cancel. But this spot right here, that's where they raised the interest rates 50%. And here we are. And it's not much of a help. It lasted for a week and a half. These are not good signs for trying to sell dollars at the moment. Definitely not good signs. From there, we go over to CAD. No, I know what we do. We go into looking at the number one brick at this point, which is now the South African rand. And it's turning up a little bit, which is a little disappointing because you would think with all this noise in the world that we would see some legitimate selling. So let's put the South African rand up on J4X. Right there. And you can see that's trying to turn up, and that's not a good thing because metals markets follow that pretty well. So we go over to, here is, that's ExxonMobil. Let's skip that. Let's go over to gold right there. And gold is holding up. That's pretty impressive. So maybe the rand will roll over. But normally it does the opposite on us. Usually it's the gold itself that starts to roll over. And that's why it made a high. And then where did it get to the high? 99, 98, 98 and change. 1898. And now we're at 91. $7 off the high. And same thing with, let me just do this. Let me save that real quick. There we are. Then we go and take a look at silver. And silver basically unchanged. It's not falling as much. And we've come from the 21-ish area to the 22-ish area. So it's about up basically $1. That's about it. Another product, just like gold, not getting into the weekly buy. And I don't understand that because you would think if it was a calamity type thing coming on, you would assume that money would run towards gold. And it's not running towards gold, which seems to be odd to me. There's a lot of moving parts in this world market at the moment. And one thing is for sure is that we see some tip-off of what happened over the weekend in Israel, but not seeing a lot. Not a lot. See some buying on Friday, that type of thing. And then from there, we go over to the copper, which is China, basically. All the time, I think of it as just China. And you can see here, still stuck in that weekly sell. It's definitely higher than the lows of last week, but it's not taking out the highs of a week and a half ago either. So there's a lot of pressure. We're in the sell on the daily and the weekly, and they lifted it up at one point today, and now it's pretty much unchanged. So, we're not seeing any really signs that anything's changing more than time itself, because we're not seeing tip-offs of, okay, it's been in a long sell or a long buy. Here it's changing direction. We're not seeing that. We're seeing that it's kind of like keeping the status quo. I guess, the politics and the world, everything is having some influence, and then we know money managers are out hunting for bargains right now. So it's a combination of both at this point. So it's not any real heavy selling. It's just that there's no real heavy buying. That's the problem. It's kind of like a buyer strike. And money managers are just buying just enough to keep it moving forward, but not exploding it. In other words, no massive run up. Now, Robin had sent something over to me today about reading Head and Shoulders in the S&P 500 and how it got to the neckline. And, the guy was saying, this was yesterday, it doesn't mean that it's going to rally, but it should rally. And sure enough, it got up there and it lifted through it. And they said that, it forces the shorts to cover. Well, obviously, we're not seeing that at the moment because, let's see, where's the stock index? Let's minimize that. So stock index is still down near the lows of the day. Right there. They made the lows there, what is that, at the beginning of the noise after the sell-off. And it's let's see, let's just bring this over a little bit. So the news came out here at the beginning of the webinar, and within 6 minutes they made this low in here at 408, and now we have a low of basically 410. So they haven't taken out the low yet, but it looks like they're trying. All the short-term indicators, this has been in a sell since right here. And so it's been breaking down. It's popped up, and more than likely they're going to break it down a little bit more. Same thing here. It's been in a sell, same time frame. And when it comes to the most shortest of our intraday charts of the S&P 500, we're doing it right now as we speak. It's in a sell. Let's do this. Let's tighten this up a little bit. So it's been in a sell since right here, and it's not doing anything more than just vacillating back and forth. Maybe it'll go take out the 408 at this point, and that's what the problem really is. It's not there. It's a buyer's strike, and I'm really surprised. I would have thought everybody would have been prepared for a CPI the way it came out. I guess they really try to ignore these numbers until they have to pay attention to them. I think that's the best way to describe it. They actually ignore them. They try not to anticipate what bad news is going to be until it actually happens. This way they don't get in trouble. Money managers have to follow their financial manifesto, and if they don't follow it, they get sued. So, I would suspect that with our math being underneath here and we're in the zero line, this thing's going to come challenge the little white line right here in the what do you call that, the Bollinger Band. And it may even, more than likely try to challenge the 400 area again. They'll probably make new lows here. And we'll watch and see. This is live webinar, so, we'll be on here for another 6 minutes, so we'll see. But I would say it's coming up right around now. It has that look to it like it's trying to break down. Now it's really starting to break down. Now we've got the full. This, it has 1,900 ticks to go. It's a 2,000 thing. And so you can see here it's underneath the zero line at the moment. So they're trying to hold that line. They're trying to, the buyers are trying to step in. But there might be another shoe to drop here in the next few minutes. And that's what's so nice about doing the webinar while it's live like this. Because I don't mind, reading the math, the way it's acting, and then we go from there. Now 408 is the low. Will they go challenge that 408? I'd say yes, with the way it's looking here. So we'll just keep an eye on it right there. Now, where did we leave off in the currency? We were looking at the South African rand, and what we're seeing is the metals are not really perking up that much for a world in collision. I think that's the best way to describe it, a world in collision. And I wanted to go look at, let's see, I did put up the options. Where did I put the option thing in? I thought I opened it up. Oh, there it is, right there. I wanted to look at one of the option products and see what they were talking about here. There we are. And I was going to look at where's it at? It's let me see if I can find it. I think it was the IT one. Let me think. It's one of those where you buy the calls in it when interest rates are rising, and you can sell the calls in it when they're dropping, that type of thing. Let's see if we can find it here. Let's see. Where did we get down to? 409, or did we even touch 408 and change? The low now is 409. Yeah, so that's what happens when our work like this goes below the zero line. It puts more pressure on the product. Let's see, where it shows us that there's pressure on the product. I guess that's a better way of describing it. Now let's see which one I'm going to go after. And we have a couple of interest rate products, and this way we can take a look at their options and get a general idea what money is thinking about. I know yesterday's auction was really very poor, and there was a really big tail to it, which means that the dealers had got stuck with a lot of bonds that the funds didn't rush in and buy. And so TLT. So let's put the TLT up there. TLT. I think this is like an accumulation of 3 different bonds or dates. Like it's like the 7-year. Okay, so there it is right there. It closed last night at 88.47. So let's look at the 88.50 basically. The 88.50 is trading at 63, and that's the put. And then the call, what did I say it was? It's 63. And let's see what the call is trading for. 63 also. So $1.25. Now let's just move the chart over a little bit for you to see. So $1.25 would put it up to basically 90 over the next, what's this, 3 days? 16 days. So 90. So they're not looking for much more. That's interesting. Is this thing's been 85 to, it's 89 to 85 basically. Actually it's 84. So this thing's not really projecting that much action in the currency, in the options of interest rates. They're basically saying that over the next 16 days, this thing could hang out in this area, and not really go anywhere, which would make sense to me. Because that's the way, it's. I don't see a lot of conviction to begin with, so that makes total sense to me. So the bonds are not screaming. If there was some big moves coming in the bonds, we would see it in the options, and we're not seeing it. So it's kind of hanging there, slow and steady, and there's not getting any real action out of it. So we just kind of watch and see. But I would say that more than likely, dollar is going to stay firm, even with on the weekly, and then at the same time, the daily is still in a sell. So it's trapped in a neutral position. All right, traders, we're out of here. This has been Doc from North America, and it's definitely interesting times. We didn't go and make a new low yet, that's for sure. Matter of fact, it's trying to turn around on us. Look at this. They dipped it down to a point down to 0.9, didn't take out the 8, and you can see right here they're trying to put it back into the buy, but we've got all this weakness in here, so we'll key off of this in the end. But you don't try to play the long here. You just don't try to be short at the moment, and then when it goes back into the short, you take the short. All right, traders. Happy trails to you until we meet again, which will be TGIF. Thank goodness it's Friday. Happy trails to you, to all our trading friends. We will catch you all tomorrow, same time, same channel. Be safe, be smart out there. Ta-ta.